On this video, I'm going to be breaking down the SMC concept like I'm teaching a 5-year-old. So if you're still struggling with understanding a trading concept or strategy you want to use to navigate the market, this video is everything you need. Yeah, I'm going to be talking about market structure. I'm going to be talking about point of interest. I'm going to be talking about inducement, which is the three criteria that put the strategy up together. And I'm going to be breaking it down and explaining it in details that when you go to the chart, you are going to know exactly what to do and how to do it. And you're going to be able to use this particular process also to make withdrawals from prop firm, just like I did, and also trade a personal account to make money as well. Now, trading is a long journey game though, so understanding the strategy is just one part of the puzzle, and you have to still understand how to manage your emotion, risk management, and all of that. But not understanding how the market works is something that is disastrous. So you want to first start one step at a time. Once you understand the strategy part of it, then little by little, yeah, you start to build the emotional part of it and see you in the other side of profitability. Now, to fully understand the concept, we want to start with the three criteria that make up the strategy, which is market structure, point of interest, and inducement. So I'm going to be doing a rough sketch before we go to the chart here. Now, when we talk about market structure, we're talking about how the flow of the market moves. And this is a general knowledge, where whether you're on the daily time frame, whether you're on the 1 minute time frame, whether you're on the 5 minute time frame, whatever time frame you are here, this knowledge is a general one. It's a way the market flow on any time frame. So the market flows in waves. So if we have an uptrending market at a point in time, now you want to pay attention to this. The market could be trending at a point in time and later change trend at another point in time. So let's say we have something like this. If we have a market giving us series of highs, lows, highs, lows, highs, lows, just like this. What this actually means is that at this point in time, the market is trending. The market could decide to change trend at another point in time, giving another waves here. So you want to pay attention to exactly where the market is trending to at that point in time. Now, all we can see here is that at this point in time, the market was trending here to the upside. Now, at this point in time, the market was trending here to the downside. So you want to pay attention to the trend, and the trend is made up of waves here, where we'll have series of highs and lows, lows and highs, highs and lows, lows and high, and that is what make up a structure. Now, let me go back to the main basics. Let's say we have an expansion here. The market creates waves, expansion and retracement. Let's say we have an expansion, the market would give us a retracement. Now, if the market gives us another expansion here, now this is a flow in which we are looking at that, okay, seems the market is going on an uptrend, because now we had this expansion, the market retraced all the way here and give us another expansion. What do we have here? The market used this zone to break structure and create a new high. Now, you don't just identify an uptrending market by only this one wave here. You want to make sure the market has given you series of waves just like this to understand where the flow of the market is going to. So if I see another expansion, I see another retracement and something like this. Now I'm having a clue of where the market is going to. This is an initial clue that is telling me that, okay, at this point in time, this market is buying to the upside. Now, following the wave, the pattern in which the market has always been moving here, we know that the market will create a series of expansion, retracement, expansion, and we know that the market will create another expansion after this retracement to continue going in the initial direction in which it's headed. So we are going to have a retracement and an expansion, and the market is continue going to be moving in this wave until we have a change in market structure and the market change waves again. Now, if you notice what could also happen in the market, this is a low, this is a high. The market could now start selling like this. Now, at this point, now this is still giving us a head look of downtrending market. So it's very fair to say the overall market here is trending to the downside. Then we'll have a partial retracement over here. Now, this is a trend. This is a trend inside the main structure, but it's still a trend. It's still a downwards trend. So you want to pay attention to this. You want to know exactly where you are in the market so that you'll be able to navigate them all through effectively. So let me give you basics on a downtrending market flow. For downtrending market, if you have the market creating series of lower lows and lower highs, this is just initially telling you that the market is selling. Yeah, so just as I said, you want to make sure you have a good amount of confirmation on where the direction the market is heading to, so that you will know what to expect next from the market. Now we have this, we have an expansion. You know that the market will give us a retracement and continue selling downwards. Expansion, retracement, and the market should continue selling downwards. Expansion, retracement, the market should continue selling downwards until it take out the main structure. Now anything inside, any structure we have inside this main structure is considered to be an internal structure. But when we take out this main structure now, we are now known to have a expansion to the upside, and the market should continue going back up. So let me give you the what we look out for basically when it comes to market structure. Yeah, we look out for two things here in market structure. We look out for either continue a wave, or we look out for the market changing in market momentum. I'm going to give you an illustration. So let's say we have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, which this is identifying an uptrending market here. Higher highs, higher lows, higher highs. Then all of a sudden we have this. Now this is an identification that the market is going from an uptrend to a downtrend. Because what do we have here? We have a change in market character here. We have a change in market character, which is telling us that the buying volume is not as high as it used to be, and we're having a change in market character. Now, at this point, just as I told you, you want to be very sure of the direction the market is heading to, so you don't just jump in immediately. You want to wait for additional confirmation to keep flowing. And when you see this now, it's now better to understand exactly where the market is going to, so that you'll be able to jump on and ride with the trend. So this is basically mean we are looking out for two things here. We are looking out for the structure wave to the upside, or we're looking out for when it's changed structure to the downside. Now the market structure can identify when we have this continuous movement, and market structure can also identify when we have a change in that movement. So this is what we use market structure for, to identify when we are on a flow or when we have a change of that flow. So you want to really pay attention to what exactly the market is doing at that point. Are we on a particular flow, or we are changing from that flow to another flow? Now before we go into point of interest here, let me give you a textbook. Let me go to the chart and give you some example on market structure. So let's say this is BTC here. Let me use, okay, it's on the daily. Let me use on the daily. Just as I told you, the market is fractal and it works on all time frame. So let me use this daily time frame as an example. Yeah. So if you see the daily time frame now, it is very clear that we understand what the market is doing. Yeah. From this point, yeah, the market took out liquidity. Then we saw this. We saw this. At this point now, it is obvious we are understanding what the market is doing at this point here. Then we had this low. Now, having to understand what the market is doing, we know that after every expansion here, there will be a retracement. After every expansion, there will be a retracement. After this expansion, the market is to give us a retracement. After expansion, the market is to give us a retracement. After any expansion we have in the market would give us a retracement. Yeah. So we understand this thing, and we're going to be capitalizing on it as well. Now, this is a daily time frame, so the noise is going to be much. But let me go back to a lower time frame so that you understand that it works on any other time frame. Yeah. It's the same flow. So I already have this one marked out. Now, if you see the structure of this particular market, just as I told you, the market could be giving us a outlook at any point in time. Now, if you understand what happened here, from this point to this point, the market was selling down. From this point to this point, the market was going up. And this is just market structure. This is how to understand market structure, yeah? Now, how can you mark it to understand your levels? Let's go back to it. So to understand your levels, you want to pay attention to the highs and the lows. Now, if you we have so much structure inside of this, but let me just use the main structures. Now, if you see what the market is doing, the market has been creating series of highs and lows, expansion, retracement, and you just see that it keeps doing its thing. Expansion, retracement, expansion, took out liquidity, then we have a change in market character from here. And ever since we had a change in market character, you can see that the market started heading to the upside, yeah? And we had this retracement, we had expansion, we had retracement, we had expansion, we had retracement, consolidated there, we had an expansion. But overall, you can clearly see where the market is heading to here. Now, as you can see, the market has given us an expansion to the upside here. And what we were expecting is a retracement here. And this is a key zone here. We expect the retracement to be able to come down all the way to this level, respect it, and continue going back up. If this level fails and we go all the way down, this is now telling us that, okay, on this time frame now, what are we seeing? We are seeing that the market has created a high, a low, a high, and instead of to respect this level to continue going up, we'll have a change in market character. So what are we going to be expecting? We're going to be looking out for the market to give us confirmation like this, and we just jump into the trend. So this is just basically market structure for you, understanding the flow of the market at that particular point in time and working with it. Yeah, so this is on the 3 hour. Let me go to the lower time frame so that you can see that all of these zones will be clearer on. It should be clear on any time frame you are trading here. Or let me use some other pair so you know that it's not just BTC. Now this is Ethereum, yeah. If you see what Ethereum is doing over here, at this point we can clearly say that, okay, Ethereum at this point was selling all through this range here, because you can see that it's creating series of lows and high. It's creating series of lows and high, and it's headed down. Now from this point where we had this low, we had this main high, we had this level, we had this level here, we had this low over here. Sorry, my bad. Then we had this low over here, we had this low, we had this high, we had this low, then the market did this, take out liquidity, and it's changed structure from here. Now everything inside of this box, just like I told you, we had a change in market structure, then the market now started selling, buying up to the upside. Now, I consider this to be a double breaking market structure, which is high probability for the market to continue going in the initial direction. And as you can see, all the way from there, the market started to just bounce up. Now, this is not a very good market condition though, but you can still understand exactly where the market is heading to at this point in time. It's very clear that we're having expansion retracements, and this is just telling us exactly where the market is going to. So you just want to pay attention. Whatever pair you are not seeing clearly, you want to be able to ignore them. It's very important you ignore any pair you are not getting a clear view of the structure of the market structure, because it's very important here to understand where the market structure is flowing to before you be able to even make use of inducement or any other criteria. So if you see what we have on Solana here, we had Solana at this point buying, then it's changed structure at this point. When it changed structure, you can see what it started doing. It started selling to the downside, creating series of lows and highs, the mini structures here. And at this point, it cleared liquidity from here, and we had the zone all the way to this point. Now consider this an expansion. This would be a retracement, and as you can see, price is even reacting from that point here. Now this would be this is a downtrending flow here, but if we have a break to the upside from this point, we'll consider this now, this market changing momentum from this downtrend to this uptrend. Now, if markets change momentum from the downtrend to this uptrend now, this is now telling us that, okay, there's every likelihood markets continue going in this initial direction. And this is when we look for buying opportunity. So this is just basically how to understand market structure. You want to make sure your structure is clear enough, readable on the price chart you want to look out for. Then you'll be able to now say, okay, you've already gotten the first part of the strategy, and the next one you're going to be looking out for now is the second part of the strategy. Now, having able to understand market structure, let's talk about points of interest. Mind you, these are the criteria we're going to put together to make up the strategy here. So market structure done. Now, point of interest. Now, a point of interest is a point in the market where high institution place high buying orders or high selling orders. This is a point where we have a lot of orders resting, and as a retail trader, we don't have the capacity to move the market, but we just want to flow with the people that have the biggest box in the market so that we flow where the actual market is going to. So there are points in which the institutions here place these orders, which is call them point of interest here. Now, those points of interest are in your market structure. There are zones in your market structure. So when you identify exactly where your structure is heading to, let's say we have an uptrend in markets and we have a high, we have a low, we have a high just like this, we have a low, we have a high just like this. Now, in this case, this market structure is telling us that, okay, this price chart is going on an upside. Here is going to the upside. Now, where are the points of interest here? The point of interest, just as I say, are key levels here. Where are the key levels in this particular chart? The key levels is this order block in which we have here. I'm going to do a very detailed video on order blocks so that you know why we call them order blocks here, maybe on the next video. This is going to be an order block, which is a key level. Then we also have a breaker block here. Now, this is called a breaker block because in most cases, after we have this expansion to the upside, once the market starts giving us this retracement all the way down, it's going to leave us with the order block here. But if that order block fails to hold, then we'll call it a breaker block. This is where the idea of breaker block comes in. And they are still point of interest. Now, when we have that expansion here, we're expecting the price of the market to react from after that expansion. We're expecting the price of the market to retrace and react from either the breaker block or the other block. So in most cases, we might see the market just do this, and come back and do this and continue going back up. And it's fair enough because the market would likely react from all of these points of interest or some of these points of interest before going back up. So we want to pay attention to this point of interest zone here, and those points of interest are our order block and our breaker block. Same is for a downtrending market. If we have a downtrending market just like this, going to the downside and to the upside, our point of interest in this market would be the last candlestick before this explosive move here. So the last candlestick. Now we're still going to talk about valid order blocks here. Our point of interest will going to be this last candlestick before the explosive move. And another point of interest we're going to be having again is this order block here that fails to hold the market. So I tell you, after this expansion, this retracement will leave us with basically an order block here that failed and created this expansion. So if that other block failed, it's now called a breaker block. And what are we expecting? We're expecting that the market, after the retracement, the market might either react from this zone or this zone because it is point of interest. That's why we call it point of interest. It is a point where we expect something to happen in the market. It is a point where we expect the market to either break those levels or continue moving from those levels in the initial direction. So in most cases, the price might react from here, or the price might also react from here and continue going all the way back down. And if you see what happened here, if the price should react just like this, you see that the price now has left us with an order block here. The price will leave us with an order block here. And once this order block fails, it means this order block is now a breaker block. So we might be expecting now for the price to, we'll now have an order block here and a failed order block here, which is now a breaker. So the price might just come, reverse, retrace, and respect from the other block and continue bouncing that back down. So you want to really pay attention. This is how to mark out your point of interest. You want to make sure you are paying key attention to all the other block and the failed other block. Now this is an example of a failed other block. You see, we have a zone here and we have a zone here, but this is the recent structure where we have this other block. So at this point, this is the failed other block here that I refuse to hold. You don't want to come out and mark this one because this is the last leg we had. We had a high, we had a low, enclosed inside of this structure, high and the low, and we had this structure, then we had this. Now this here is a failed order block. You want to pay attention. Your breaker block has to be coming from a place of the order block that failed, that created the expansion. Other block that failed, that created the expansion. So let me go to the chart now to show you chart examples so that will make this more explanatory. Let's use Solana to be able to understand our point of interest in the market. So I'm going to zoom in and be very detailed on this one here. So if you see what Solana is doing at this point here, we had Solana giving us series of highs and lows. We're going to go into internal structure, highs and lows. This is a high, this is a low, this is a high, this is a low, and we'll understand that the market is trending to the upside, creating all of this series market structure here. Then from this point also we had this low, which is the recent low. Then we had this high over here. Now if you understand what happened, let me zoom in a little bit so that you see it very clearly. At this point here, this is when we had this low being taken out here. Now you want to pay attention when the low gets taken out with a body closure. So you can see that this low get taken out with a body closure, which identify a change in market structure here, and telling us that the market's change has changed in market direction. Now, just as I told you, when you see this body closure, you don't just jump into the market. You wait for additional confirmation to understand that the market is actually heading to the downside. And this has to do with inducement, but let's leave inducement for the next section here. Now, this is the main structure here. Now, at this point, you are going to be looking for the point of interest in which we have in this market here. And let me see on which time frame I have this point of interest very clear. I think on the 45 minutes is better. Now this is an order block we have here. So if you take a look at this order block here, this is an order block. I'm still going to tell you how to mark out the very valid order block, but this is an order block we had here. Yeah. So what literally happened is that after we had a market structure shift, the market confirmed to us that it's actually heading downwards. Then it just came back to respect from that our point of interest. And if you see, then we had this internal structure here, and the market just keep pushing back all the way down, telling us that okay, we're now heading back down. So at this point now we had from this point we had this low, then we had this expansion, we had this retracement here. And if you see where this retracement was reacting from, it's reacting from this breaker block in which we have here. Just as I tell you the market will have two basic points of interest, which would be the order block and the breaker block. So looking at it again from this point here, the market gave us another expansion to the downside here. Now, one mistake we mostly make as traders is identifying internal structures and main structure here, which is something to also still look out for. But as you can see from this zone, we had a order block here. This is the last low that we had that created this expansion. Now, all of these structures are enclosed inside of this same movement here. So they are basically just internal structures here. They're basically just internal structures. Now this still remains the main structure. So the market started to give us a form, but obviously just take out all of these internal structures and respect from this point of interest here. So at this point, if we are going to mark out our other block, let me see on which time frame it's more. We have a other block at this point here. We have another block at this particular point here. Other block we have for the main structure here, and the market continue heading back down. The market came here to react from it, and we had this low, we had this high, then we had the market gave us another low again, and at this point, what do you see? We have an expansion and the market creates a retracement. So if we are to judge by what is happening here, this other block here has been mitigated, though it's still an other block, but it has been mitigated. But as long as price is still selling downwards, we're still going to be working with it. Then we'll have the price now head over back to this other block. So you can see the other block, all of the other block, the point of interest are respecting here. So it's either the point of interest will respect from the other block or the breaker block, other block, breaker block, other block or breaker block. Now I'm going to tell you why other blocks, why some breaker block respects more than other block, and we're going to be using this case scenario to explain that. Now, for you to know where you are picking a trade entry from, maybe from your other block or your breaker block, you want to pay attention to these things here. And that's where inducement also come into play. So let me go back to our previous chart here. So looking at these things now, you already understand the other block level and the breaker block level here. And these are the criteria. These are the two criteria you watch out for. Now, the next thing you want to watch out for is your inducement. Now, what is an inducement? Inducement is just like a trap in the market here. And how will I say it? Let me give you an instance with other block and inducement. Let's say we have, let me use an example of something different here. Let's say we have the market going on an uptrend or an institution, and we have an expansion here, and this is a order block. Now, I told you that an order block is a valid point of interest where institutions look forward to buying. So let's say we have this expansion to the upside, and we have this break in market structure. We'll confirm that the market is now going on an uptrend at this point. So what this basically means is that we have a lot of orders resting at this point here, and we also have this our point of interest to be very valid. Now, what makes us to pick from either this point of interest or this point of interest is inducement. Is the inducement we see protecting it. So if we see an inducement is like a trap in the market. So if we have these little lows like this and go up, that's telling us that the price could just come, use this zone as an inducement and react from this one here. So it induces traders to want to take an action from here and take a trade from this point of interest and continue pushing back up. So a valid point of interest for us to be picking are the point of interest that has inducement. If your point of interest is not inducing some people to get into the market, then you want to also still take a look at that point of interest. That's why it's very careful for you to mark a point of interest here. You want to make sure your point of interest is a point that somebody is looking forward to take a buy or a sell from. Using this entire concept we have, that is what we have by inducement. So if we have this high, we have this low, we have this high, and we have this low over here, and we have this high. As you can see, this zone here is like a OB. It's still reasonable to call this zone a order block level here. because of the expansion or the implosive move we have here. Now this zone would be an inducement, and there are two types of inducement. We have the single candle inducement and we have the basic high level retracement inducement here. So when we have this inducement to the downside and we have this, you want to make sure that that point of interest you are picking, there's an inducement just resting above it or below it. This inducement is what will lure some traders to take action before where they were supposed to enter. So if your inducement is not solid, or if what you mark as inducement is not a zone that could actually make some people to take action, then that inducement might not be a high probability inducement. So that is just the idea behind inducement here. So the chart will reverse to induce some people, some traders, before respecting from the main key level in which it's supposed to respect from, and continue pushing to the upside. So this is just what inducement is in the market. It's just like a trap for traders that aren't aware of it, yeah. But we're still going to be breaking it down even in details. So let's go to the chart, yeah. I think I was showing you an example. So now, why are you going to be marking your trades from the point of interest from either a breaker or an inducement? Now, let's say we have a expansion to the upside, we have a retracement, we have another expansion to the upside. You want to make sure whatever point of interest you are picking has that form of displacement. So from this point here, if we have a very good amount of displacement from this point, displacement means the market leaving a good amount of inefficiency. So if we have a good amount of inefficiency at this point, boom, the market is likely coming back to react from this point of interest and continue going back up. If we don't have a good amount of inefficiency after we break up this high, then the market is likely going to come back to this other block to continue going back up. Let me give you a scenario here. Now, if you see what happened, let me take out all of these charts to better clarify. If you see what has been happening on Sol here, after we had this break here, now there was no, on this point of interest here where the market broke out from, there's no inefficiency. The market didn't leave this zone and created that expansion, that explosive move from here. Instead, it just did its thing inside here, and the market will always go to where we have inefficiency before we move. Now, if you take a look at this second point of interest in which we marked out here, let me mark it out properly. If you take a look at this second point of interest in which we have marked out here, you can see what happened. You can see how the market left that zone impulsively. From this point, you can see how the market broke down this zone impulsively. Now, after the market broke out this zone impulsively like this is telling you that the market left some form of inefficiency at this point of interest in which we have here. And in most cases, this is when the price would come and use this point of interest to trigger a price. Now, what you see when you happen at this point, you can see that we have a break, but the market didn't leave any form of inefficiency here. All through the way that it broke down and it just continued selling, the market didn't leave any form of inefficiency on this our main structure that we have here. So since the market didn't leave any form of inefficiency here, the price is more likely to go back to your order block. Same at this point, the market broke down here, but it didn't leave any form of inefficiency at this point of interest. Any point that the market didn't leave any form of inefficiency, the market is likely to go back to react from the order block. So this is just one of the criteria you look out for picking your point of interest here when you want to really key down to select whatever point of interest you are trading from. You want to look at how the market is creating displacement from that level, creating inefficiency from that level. If you're trying to mark out a breaker and that breaker don't have a lot of good inefficiency, you don't mark that zone out. You are looking for a zone that have displacement, inefficiency, and that is your point of interest with a more high probability trades. Yeah. So that is it for the whole strategy. Now, combining all of this strategy together here, we talked about market structure, that is understanding the direction of the market. We talked about point of interest. This is the key level where we are expecting price to come back to and react from. Key level could be the breaker block or the other block. Then we talk about what actually triggered or what triggers a particular point to hold, which is inducement. And I tell you, the inducement is that first break that you have in the market, yeah? And it could be a single break or a full retracement. So if we have a break like this and the market just created this form of inducement like this, and this price is yet to be triggered, you should know that when the market would come back to that zone, is going to respect from here. Now, why is this zone going to respect even more? Because the market leave a form of inefficiency at this point, yeah? So if the market leave a form of inefficiency at this your point of interest, it gives that point more probability for the market to hold. If the market didn't leave any form of inefficiency, then you should be watching out for the OB instead. So if the market just and it didn't leave any form of displacement or inefficiency, then you should be watching out for your actual point of interest, which is the breaker. So something like this could just happen and the market just continue going back up. So these are what you also need to pay attention for when understanding how to trade your smart money concept here. And you just get to train your eyes with it with time. So on the next video, this video is already getting very long. On the next video, I'm going to properly break down order block, properly break down displacement, and I'll break down breaker blocks for you so that you know how to pick trades from these levels here. So just watch this video, digest it, and on the next video we're going to continue. So if you're new to this channel, we talk about crypto trading and trading in general, psychology tips and everything. Subscribe to the channel and see you on the next one.